Hi, welcome back to Building Up Your Business, the podcast. I'm really excited today because we're going to talk about one of my favorite topics on how do you save money, and that's mitigating risk. Today, we're joined by Spencer Stone with a background in sales engineering and compliance advising for small businesses. He is now works with Southern California business owners to help them understand, mitigate, and transfer risk. He is a commercial insurance broker for USI Insurance Services, specializing in manufacturing and distribution, which I know that's why you are all here. So that is why he is the best person to talk to about the top 4 ways to mitigate manufacturing risk. And as always, I am Erica Dill with Operation Up, your hostess with the mostest. So without any further ado, thank you so much for joining us, Spencer.
Yeah, absolutely. I'm super glad to be here. Thank you so much, Erica.
Yeah, well, I am excited for your expertise because Lord knows I can't be the one to be talking about this stuff, but we need the pro.
That's why I'm here.
That's why you're here. So, give us a little bit of background. Obviously, risk, I'm sure risk has a very large range, but do you have any numbers about how much money we're talking about when we're telling people that they could mitigate risk for these manufacturers?
Yeah, absolutely. So there's a lot of different exposures associated with being a manufacturer. There's danger to your employees, there's dangers to your vendors, and then there's things like cyber liability, like getting hacked. And so the losses can vary. For example, if a manufacturer is caught in a product liability lawsuit, it could be hundreds of thousands of dollars that you're going to
Yeah.
pay a lawyer, you're going to pay in settlement costs, and if there's damages to a third party, you have to indemnify that third party. So we're talking, hundreds of thousands of dollars typically for
Wow.
big, large claims.
Wow. Yeah. Well, and it's one of those things where you never really know when you're going to get hit. It's something that it's that lurking risk that is unpredictable and you can do everything against it, but
Right.
it is what
Yeah,
it is.
exactly. And insurance is like that thing, it's like people don't want to purchase it, but if you don't have it, like you're in big trouble. So, like for example, we'll talk a little bit about cyber liability and some of the claims that I've seen and the losses that I've seen. So, I work a lot with Chubb, which is a big insurance carrier. They do a lot of cyber liability policies. And for small manufacturers, if you're doing $5 million in revenue, and let's say you just have like a couple of customers, you have your own employees' information, and you suffer a hacker comes in and infiltrates that information, you can pay $600,000 pretty easily
Wow.
in investigation, having to recover lost data. There's a laundry list of things that can happen if you get hacked by an outsider.
Wow. Well, and I know after the most recent MGM cyber attack, that's kind of one of those things. I was actually in MGM when that happened. It was a very unique experience, but
Yeah.
um, it's one of those things that's a little bit more on the forefront of people's minds. And I didn't even know that there was insurance for it. So I'm really excited to hear what you have to say on these various topics. So we're talking about the top 4. So what are those top 4?
Yeah. So the top one, the one I talk about probably the most, is aligning insurance with contracts. So
Okay.
many times vendors, like for example, I work with manufacturers that provide parts to the aerospace industry. So
Mm,
companies like Honeywell and Boeing are the ones that provide those contracts to these small business owners. And if you're a small business owner and you just got a really big contract with Honeywell, you might just be really excited to sign the paperwork and to lock in that customer and to lock in all that work because it can be maybe $500,000, maybe $1 million worth of revenue for your business. And if you're a small business owner, that's really attractive. You don't want that to go anywhere else. However, in that rush to sign those purchase orders, you might be agreeing to things that isn't necessarily covered in your insurance policy. So
oh, interesting.
I like to help out business owners and make sure that, hey, are the contracts that you are signing, the liability that you are agreeing to, if something were to happen, is your insurance going to respond appropriately? And if it does, great. We don't need to change anything. But if it doesn't, let's figure out a better solution. Maybe we can negotiate with Honeywell. Maybe we need to adjust the insurance policy. But there are ways to essentially help, make sure that the contracts and the policies align more so that there's no exposures. And if you're exposed, that's just dollars, right? If you're exposed and insurance not going to cover it, you're just going to have to pay for that stuff out of pocket. So
Well,
that's
and I was
one.
just thinking about like when you're talking about that, like those who sell to big box retailers, if you're selling to
Hmm.
the Home Depots, the QVCs, the Walmarts, the Targets, like I can only imagine what they have in their contracts that people are probably not paying attention to. Specifically, if you're a smaller business, maybe you are that $5 million business and you're going into that world for the
Hmm.
first time, you may not even be looking for it.
Right, exactly. And the companies that you're doing business with, these big box retailers, they might provide the same contract language to a vendor that does $100 million in sales to one that does 5 million in sales. But if you don't ask the vendor to maybe make an adjustment to accommodate for, being maybe 1/20th the size of some other under
Yeah.
other vendors, so you have to advocate for yourself. That's something that business owners can do on their own when they're doing the negotiations, or you can have a broker like myself step in and help with those negotiations.
Wow. I had no idea. That's
Hmm.
great.
Yeah, absolutely.
So, what's the next one?
So there's a couple. So I would say making sure that estimated revenue amounts and estimated payroll amounts are being communicated every single year to the carrier. This is
Hmm.
something that is commonly missed. There are brokers that might, after maybe a couple of years, they might get lazy on the service aspect and they might forget to call their client and be like, hey, have you guys increased in revenue? Have you hired new people? Have people left your organization? And so if you don't communicate those changes to the carrier is just going to bill you based on whatever was going on last year. And if your revenue has decreased a lot, then you're going to overpay for this next year if you don't update them. If it's increased a lot, then by the time you do your audit, because every single carrier is going to do an
I was just
audit,
thinking that.
they're gonna bill you for the difference, right? And you don't want to end the year with an unexpected $20,000 insurance premium bill that you just didn't realize was coming. That's why it's important to have a broker that's proactive in making sure that these things are continually updated.
Well, and I was just thinking kind of on the reverse too, like when we talk about personal taxes, we talk about, not
Hmm.
giving free loans to the government, but the
Right.
same thing would go for your insurance. So if you aren't up to date and then you are paying based on
Hmm.
past numbers that were maybe
Hmm.
higher and you get to the end and then you've just given them a free loan when you go to the audit and they don't give you money back, it's a credit, right?
Well, they give you money back, but well, that's actually, there's a caveat to that. So you'll get money back if you're with one of the admitted carriers inside of California. And most people, if they're not in the insurance industry, don't know the difference between an admitted insurance carrier and a non-admitted.
Yeah, I've
And
never
it's
even heard that term before.
nowhere. It's really easy to understand. So, admitted insurance carriers have to get their rates approved by the insurance commissioner of California.
Oh,
So,
interesting.
they have to submit their rates, they get them approved, and then that's all that they can charge for those specific class codes. A non admitted carrier doesn't have to abide by the rates that the commissioner of insurance here in California. So they can charge whatever they want to make money. So if you're with an admitted carrier, it's usually better because you have a little bit more protection. But if you can't get insurance there, then people have to go into the non-admitted market, and that's the difference between the two.
Gotcha. So then you get money back only if you're in the admitted?
Usually, if you are in an with an admitted carrier, like let's use Liberty Mutual for example, and you overpaid on your insurance premium because last year you guys forgot to update them with revenue, and your actual revenue for the year was much lower than what was reported, you'll have an audit, and then Liberty
We
will
hope
send you.
not. We hope nobody's in that category, but it happens.
Exactly. I had a client that just went through this. Like they were with Liberty and they had overestimated their revenue by 34%. So
Ooh,
34% on their insurance is quite a lot of money that they overpaid. So they ended up getting back almost $17,000 from Liberty.
wow.
And they could have just taken it as a check, but they decided to just apply that towards their next year's premium.
Gotcha.
Right.
So
If you're
then
with
what happens if you're not with an admitted company?
So you have to look at the policy language. So if you're with a non-admitted carrier and you've overestimated on your insurance and you've overpaid by, let's say in this last example, $17,000, lots of non-admitted carriers will just keep it, right? There's no they in their policy they might state that any overpayment doesn't include a credit even if you've done revenue numbers that are below what you estimated. So what I tell my clients is that if you're doing your general liability with a non-admitted carrier, I usually suggest to underestimate by a little bit, because the worst is that you'll pay a little bit more,
Yeah.
but you don't want to be in the position where you get no money back.
So it's almost like, well, no, because even if you do personal taxes and you overpay, they're giving you money back. So it's almost worse
Hmm.
than doing your personal taxes.
Yeah.
Is there, so you talk about admitted insurance brokers in California. Do other
Hmm.
states have similar programs?
Yes, yeah. Like Liberty, for example, is admitted in California. They're admitted in Arizona. They're admitted in Nevada, and there's other more regional insurance carriers. So
Okay.
it depends on the state. They'll have a different series of admitted carriers, and then they'll also have a series of non-admitted carriers.
Okay. So basically, check with your local insurance broker and make sure you know if you're with an admitted or a non-admitted.
Yeah, and it should show anytime a business owner gets a quote from their broker, maybe they get multiple quotes. On the quote itself, it should tell you whether or not this carrier is admitted in your state or if it's non admitted in your state.
So you just need to know what that means and where to look for it.
Right, exactly. And the broker should tell you. A big clue is that on non admitted carriers will charge extra service fees and taxes and broker fees that you just don't see with admitted carriers. So if you get a bill from your insurance company and you see all these fees and these broker fees, that should be a clue that this is probably a non admitted carrier that I'm with.
Interesting.
Hmm.
Wow, that's good to know. I had no idea.
Yeah.
So what's going to be the third risk?
So the third risk, we talked a little bit about cyber liability.
Yeah.
So cyber exposure is really big. Most people don't even consider cyber insurance until they are the victim of an attack, which
Mm,
is too late, right? So I have an example on this one. So I earned a client's business, so they signed a broker of record letter naming me their broker. The day that they became my client, they were hacked by these Ukrainian hackers. All right. They just had a general liability policy. General liability policies exclude anything cyber related. You have to have a standalone, separate cyber liability policy for insurance to protect you. So they didn't have that. So they had to hire a cybersecurity company to investigate. They had to pay for that out of pocket. They still had to pay payroll, so they were still paying their employees to come in the office. And they lost a lot of income because they weren't able to operate to full capacity. So
wow.
they spent probably $50,000 to $60,000 to have to recreate lost data, had to pay for expenses in the investigation, had to pay for payroll, which could have been paid for by insurance had they have had a cyber liability policy.
So a cyber liability policy is kind of like for those of us in California, it's like your earthquake insurance. It's a
Right.
separate insurance. It's not included in your normal one, and you don't want to be caught without having it. So
Right.
how does the cyber insurance actually work kind of like a normal policy where you pay for a
hmm
certain amount of coverage and when happens, is there a deductible? Is it work like normal or is there special workings for it?
Yeah, it is pretty normal. It's very comparable to a standard general liability policy. However, with cyber liability, there's two parts. There's the first party part of it, where it's like a hacker can come in and destroy all of your accounts receivables, right? They can encrypt all of your information so you can't access any of your company data. So that's first party. That's company information that was destroyed. You have to pay money to get that stuff restored. And then there's the liability portion of it where people that hack into your system can get health information for all of your employees. Like if you're doing all their health
Mm,
insurance and their benefits and they get into your benefit system, now they know all their medical history, they know all their personal information like social security numbers, email addresses, and then if you're taking client payments, right, you take credit cards, you're invoicing your clients, all the payment information. So there's the health information, personal information, then financial information. And you can have, you can have one customer and then you can have all that information. You can have those three types of information for each individual customer or employee that you have. And if all of that stuff gets leaked, you have to spend money to notify all of your customers. You have to send them emails and text messages. You have to pay for credit monitoring. So if you don't have a cyber liability policy in place, businesses have to pay for that themselves. So when I mentioned that $600,000 is a typical claim for a small manufacturer, like that's accurate. Like these costs can be massive and these costs can continue over years if you have to pay for credit monitoring.
well, and how does that, I mean, like, because let's take the employee risk version. If they get in and they get to people's medical information, that's a
hmm
violation of HIPAA.
hmm
So, like, are there liabilities that they have to pay to the individual employees as well?
There could be penalties. Yeah, there's fines and penalties with having HIPAA information leaked. So that's another thing that insurance can help cover the cost of if you do receive fines and penalties. Some insurance policies will have coverage for that, some don't. So you have to be
Mm,
specific about which policies you go with. Um, but yes, that is definitely a part of it.
wow. There's so many things behind, well, I mean, and then not to mention lost potential income if your customers decide that you're too much of a risk because you've
Right.
had a cyber attack. Is
Right.
there, I know like with general insurance, if something happens and there's like a lost income,
hmm
sometimes they'll cover it under that. Is that allotted for in a cyber insurance policy as well?
Yeah, typically in most cyber policies, if you have a standalone policy, they'll have a section for loss of income or what they
Okay.
call business interruption because of a cyber attack. Yeah,
Okay.
it's usually part of it.
That's good to know because I know that there's just the loss of time for when you couldn't do whatever you needed to do because of however it was disrupted. But then if you lose customers because of that action, which is very possible,
hmm
that's also uh, part of that challenge.
Oh,
So it's good to
yeah.
hear.
Yeah, it's more likely than not because your customers, they need the product by a certain date. And if you can't fulfill it because you're dealing with a cyber attack, then they're just going to go to the next person on the list. And it may
Yeah.
be difficult to earn that customer back again. They might be gone forever.
Right.
So, yeah.
Right. Yeah. How do you tell them, we had a cyber attack, but we're good now.
Right.
We didn't prepare ahead of time, but we're okay now. That's not
Right.
exactly the trusty person I want to work with.
Yeah, yeah, and there's the whole PR part of being
Yeah.
attacked, having a cyber attack. Insurance will pay to, take care of your reputation and they'll pay for a PR company.
Really?
Yeah, that's a big part of it. So, cyber insurance has that aspect as well.
So all those PR specialists that do crises, uh, in fact, we had one recently talking with us on this podcast that
hmm
you can actually go to one of them and get and help to mitigate some of that risk as well. That's a nice benefit.
Yeah, yeah, absolutely. If it's in your policy and it's included, they'll pay for the cost to have someone help you with that.
Wow, that's
Hmm.
awesome.
Yeah, absolutely.
So, what is the fourth one?
So the fourth one affects every employer that has at least one or more employees, and that's workers' compensation.
Yeah.
Um, Workers' compensation is huge in California.
Yep.
It's in most other states, it is not the most expensive portion of an insurance program, but in California, it can represent up to one third, close to one half of the
Wow.
entire insurance cost. Okay, and workers' comp is dependent upon claims. Are you keeping employees safe? Great. You have low claims, you're going to pay less money to workers' compensation insurance. It's similar to being a good driver, right? If you're a good
Yeah.
driver, every year your car insurance company should be giving you some money back for having no auto claims. Same thing for workers' comp. On the opposite side, right? If you're a bad driver, your insurance goes up. If you don't keep employees safe and you have a lot of claims, your workers' comp premium goes up. So, working with a broker who's proactive about closing claims, working closely with the carrier, and then implementing solutions and strategies to keep everyone safe is really important.
And that makes total sense. I mean, the other aspect that I think about when I think about workers' comp is making sure that your employees are classified correctly.
Mm-hmm. Yep, absolutely. Classifications, it can be a little tricky because carriers might want to classify your employees one way, but you might
Yeah.
feel really different about that. And it's a broker's job to kind of be the middle person and to be like, hey, like, this is the reason that the carrier wants to do it this way. Mr. and Mrs. Business Owner, are you guys okay with that? And then making sure that those classifications are accurate is also really important because that will have a direct impact on your premium because employees working on the operations side of a warehouse, like working with a CNC machine or a lathe, that's a really dangerous job
Yeah.
compared to someone who's an administrator working in the office.
Well, and I know from doing this in the past, every business owner wants to classify as many people as possible as the administrative.
Right,
I love your facial expression when I said that because we all know that that's the lowest possible rate there is.
right.
But there are very specific traits that get that role. And it literally has to be somebody who sits at a desk and works on a computer and paper pushes and doesn't touch a pair of scissors, doesn't touch anything.
Yeah.
And there's a bunch of administrative roles that are like above that one that have a higher premium. But
Hmm.
I remember specifically talking with one company with one business owner. And he's like, no, no, they all work on the computer, even the sales reps, even the this. And I'm like, you can't have literally an entire company under that administrative. Nobody's,
Right.
they're not gonna buy it.
Right, exactly. And that's so true. I mean, those usually for small businesses, middle market, they might have more classification codes, but from my experience, businesses usually have two codes. There's the main code that encompasses most of the operations of their business, from the delivery drivers to the person working on the actual machines, to people that are just doing quality control and just checking that things are looking good. So they're all classified under the same code. Your QC person, your driver, your machinist, they all have the same exposures because they're working in the same area. And then if you're clerical, as long as you're not stepping into the manufacturing floor and you're just keeping things in the office, you can just be on a different class code. But if the insurance carriers, the workers' comp carriers, if they do their audit and they're interviewing you and they're asking your
Yeah.
employees, and if they even think for 1 second that this employee has to walk through the manufacturing floor for any reason, they're going to want to change their code to the more expensive class code.
And it makes sense because if that person is walking through that manufacturing facility, I mean,
Hmm.
the percentage of chance that they're going to get injured, it jumps up tremendously as opposed to them
Right.
sitting at a desk. So it really does make sense. And when you think about it from a business owner standpoint, the whole point of workers' comp is that they pay out and take care of your employees when they get injured. And if you
Right.
have them misclassified, like you're not going to get that right coverage for your employees. And as we've all been talking about, employees feeling like they're not being taken care of and getting, and they're not just a number. Like this is
Hmm.
a great way to show that you actually care about them that they may not actually see until somebody actually gets injured, which we hope is never. But
Right. Yeah, and that's a great point. And to be honest, even if someone is misclassified and they have an injury and they file a workers' comp claim, workers' comp will still pay for their medical expenses and their loss of income. However, at the end of the year, or maybe right then, an adjuster is going to say, "Hey, we should have been charging you this
yeah.
for this employee." So they'll continue to provide coverage. They're going to send the business owner a bill, and then when it comes time to renew, they may offer them a cancellation notice. They may not renew them.
Oh my goodness.
Right. So you have to scramble. So that's why it's good to be honest with your workers' comp carriers, because if they feel like you're just not being honest with the carrier, they're not going to want to continue providing insurance for you.
Yeah. Well, and that's a bill. Nobody wants those unexpected bills to just pop up. And especially at a time when you have an employee who's out on a worker comp claim, you're already having to deal with, the stress of having coverage for the job or finding a temporary or whatever. You don't want to have to deal with a surprise bill on top of that.
Right. Exactly.
So, what else did we miss anything? I feel like we covered like so much and there's
Hmm.
so many like nuggets of information. Is there anything else that you want to add that we might have missed?
I could talk all day about insurance. I would say that these four topics are come up the most with small businesses. So
Yeah.
if you're a small manufacturer, whether you're just working on metal parts, maybe you're making toys or you mix chemicals, all of these same topics are going to affect your business. And it's really a good idea if you feel like, you have a broker that has maybe been dropping the ball, or you just don't have a really good understanding of your own insurance program and you want to have a better understanding. It's important to work with someone who's an expert in your industry so they know
Mm.
which products, which insurance products to recommend, but then also maybe your broker, someone who's an expert, can provide you with the data, like benchmarking data of other businesses similar in size, similar in scope. What are the limits that they purchase? What are the deductibles that they go with? So that when you're purchasing insurance, you actually have data to make these strategic decisions about how you're spending, X amount of dollars on insurance. And that provides business owners with more confidence that they're not underinsured, they're not overinsured. Their broker has shown them the data to put them in the best position possible.
So it's like with any new vendor or finding a vendor, having that real true right fit of industry and business size so that somebody actually knows with experience how to take care of you to the best way possible. You just really have to find that good vendor fit.
Yeah, exactly. Find a broker, vendor that you like, you trust, and then allow that person to manage your insurance program. I don't necessarily recommend working with a bunch of different brokers because they're going to cross paths. So just
Mm,
pick one
interesting.
person that you like and trust, that you know has experience in the industry that you make your product or service, and then go with them.
And it's actually interesting that you brought that up because that's a question. How hard is it to switch brokers? Is it pretty easy or is there a challenge to it?
Yeah, so most of the time it's pretty simple. So I work with a large brokerage that has access to many different carriers. Now the carriers, they will accept what's called a broker of record letter, which is just a letter that says, "Hey, I want to move from this broker to this broker," and usually you just submit that, and it takes 10 days. They do give a chance for like the previous broker, or we call them the incumbent broker, to retain that business. But after those 10 days, that 10-day waiting period, the new broker takes over the current insurance policies as they stand. So you don't need to change your insurance program. You're just essentially changing the broker who's servicing the program.
Okay, so then it's relatively easy. And then once you're
Yeah.
with that new broker, when you come time for renewals, then they can help you figure out if that's the right insurance or those the right insurance programs for you.
Exactly. Yeah, there you don't have to deal with the old broker who is maybe providing poor service. You're just giving it to this one person. They're going to do the renewal and you're just working from them. Yeah, it's pretty simple.
Awesome. That's good to know because a lot of times I know business owners have so much going on that they're any amount of change or anything that they have to actually put more effort into, they're like, okay, I don't have brain capacity for that. So it's good
Hmm.
to know that this is one of those things that could be saving them money and bringing them better coverage that's practically non-existent when it comes to change.
Right. Yeah, exactly. Yeah. If any, business owners or don't want to like upset the waters, they like the carriers, they like the insurance program, but they just can't get an email back from their broker, can't get a phone call back, then just switching brokers to someone who's better on the service side of things is very simple.
Well, and from talking with you, you specifically specialize in small businesses that are in the
Hmm.
manufacturing and distribution world.
Hmm.
So, for anybody who is in that market and in that demographic, you would be a great person to contact.
Yeah, absolutely.
And where can we reach you? Is LinkedIn or email? What's best for that for you?
Both. Usually my email is great. So my first name, Spencer.stone@usi.com. My LinkedIn, I'm super active on LinkedIn. So just put in Spencer Stone, USI, I'll pop right up. And then, yeah, email me, message me on LinkedIn, and I'd love to help.
Well, and we'll put your contact information in the description of this video and podcast so that if anybody has any questions, they can reach out to you.
Yeah.
So, thank you so much for your time, Spencer. This has been incredibly informative, and I'm sure I know I learned something, especially about cyber insurance, because that's definitely something I've never had to deal with. So, I
Hmm.
really appreciate you sharing all of that information and being a potential resource for all of our listeners.
Yeah, absolutely. This has been great, Erica. I appreciate it, and thank you so much.
So, thank you for joining us. It's been another great episode of Building Up Your Business. From bombs to order fulfillment, marketing to taxes, learn this stuff from the pros before you step in it. And I am Erica Dill with Operationally Up, your hostess with the mostest. We're freeing founders from those operational daily ruts, and we're here to help you. So, tune in next time. It's been great to have you.